So you can see after I pinned down her comment, I also promised her before the next 24 hours I'm going to be able to make a very nice video responding to her question, which she need more explanations about market liquidity with respect to magic bomb spike strategy, which is among the people that are using the strategy, and she among the people that have been backtesting the new version of the strategy, and that was the reason I'm responding to her with a special liquidity boom and crash trading system. So let's dive in now. So even on the lower tour as I am, because I want to make sure I help this my client achieve what she wants with this strategy, I promise to make sure I deliver a very nice video for her responding to her question. So let's dive in. So this is a premium content. This is a premium BTF content from the boom and crash magic bomb spark strategy. So let's dive into the main quotable content, and we will be able to understand why you need to understand highs and lows system, why you need to understand market liquidity, and also why you need to make sure you are using the boom and crash magic bomb spike strategy and understand the main core concept behind it. So let's dive in now. So even today, this evening with this my client, I was able to spot a very nice setup for her on boom 1000, which is the same system we use for the strategy. I also sent her this thing. She should be able to understand the kind of market phases I used. I told her we don't trade in the two phases of the market. We only wait for the distribution and vice versa for uptrend and downtrend. So this is the basic concept you need to understand on how you can be able to understand the highs and lows systems. You need to understand what you mean by AMD, accumulation, manipulation, distribution, or power up to the anyhow you call it. You are very fine and you are good to go. Every day, on every single daily candle, the market started to accumulate this area. You see market start to range. After market finish ranging, then the smart money. Who are the smart money? The big boys. The smart money, the big boys, and other financial institutions such as hedge funds and even government officials. They know how the retail traders think people will start buying on these equal lows and equal highs. This is what we mean by liquidity, because there will be a break of structure above these highs, return back, create another higher high again, confirming a move in an uptrend. But after that move, what happened? The market started to distribute because this was a manipulation pace. Anytime the smart money want to sell, they have to buy the market off again to trigger the stop losses of all the traders that have bought above this resistance to buy the breakout. Make sure they have exited all the traders. So this move, this market supposed to go down on normal ground, but market refused to go down. It started to range. After ranging, it started to go off again for two trends. And what happened next again? The market sharply break below the previous low and retested it and maintained the trend to foolishly go down. This is the main scenario you need to understand. This is for the bearish scenario. Let me show you for the bullish scenario as well. This is for the bullish scenario. This is for the bullish scenario. You can see every day the daily candle often here, then it comes down to the lowest of the week and form a daily low. Market retraces off again, go back and create the daily highs and retraces downward again and close at the closing price level. So this is bullish EMD, accumulation, manipulation, distribution phase of the simple market trend. So anytime market was unable to, like, look at it here, market manipulate, it breaks down again, grab the liquidity. This is a liquidity. This yellow area you are seeing is a liquidity, because these are stop losses of other traders that are buying short or going long at this range level. And what happened? Price broke below it, and price reached the lowest level of the day, create the lowest of the week, start dancing here, start to form higher highs, higher lows, and we just move. And what happened? We were able to cut the price level at this area where we were able to grab our order block price after the first red test of this breakout, and market sharply go off. So this is for the bullish AMD. Power of 3, accumulation, manipulation, distribution. This is a system that the boom and crash systems is being built. So you need to understand this concept, and you are very, very, very good to go to understand everything with the strategy. So even though I'm on a laboratory, but I will try as much as I can to make sure I finish recording this video for her. It's been a long time, and I need to explain some certain detail of things for her so that we can be able to move on. So VO3, power of 3, or AMD is the same concept that we use. Either you are an SMC trader, or you are an ICT trader, or you are a price action trader, this system works for you. So look at how the system is now. Let me show you something. This is for the bearish structure. You can see market often see this yellow area is a manipulation. So you see, the smart money, if they want to move market down, they have to always go high. Look at it. Market start to accumulate here, accumulate orders, break above these highs as if market want to trend up. What happened? Market reverse, go off again and break below the lowest low to confirm the trend down, reverse and take up our order block below this zone, and market sharply go down. This is for the bearish scenario. The same thing apply. Price often at this price level go off again to form a high. You see, from this level price often go up about to form a high. After it form a high, reverse down to this often price level and continue going down. Come and from this lowest of the day where this our spike down was, we are able to catch this spike after this bearish signal reversal with our OB. OB means order block, either order block or a fair value gap. If you use order block, it's fine. If you use fair value gap, that's all fine. For those that may ask me what is fair value gap or what is order block, kindly ask me in the description below, and I'm going to make a very nice video on what you need to understand about order block or fair value gap. Either you're an SMC trader, or you're an ICT trader, or you're a price action trader. So let's dive in now. Power of 3, it simply means it's a trading pattern. Excuse me, I have a low battery, it's fine. It's a trading pattern that breaks down the price action on the chart into 3 major pieces: accumulation, manipulation, and distribution. So this our boom and crash system is built an AMD system. Whenever there is a buy opportunity where market was unable to break the previous high, it will give you a spike down to catch your spike. When there is an opportunity, market was unable to break the previous low, will give you a direction to pick a trade of what? To catch a spike. That is how the strategy is, and that is how the robot is. So let me show you some other things you need to understand about the strategy and the whole system. The boom and crash matches bounce back strategy works based on highs and lows system. Highs and lows system is a system that will give you a fully identified high and a fully identified low, and whenever price action breaks above the highs and continue uptrend, you will take a buy signal. Whenever price action fails to break above the previous high, it returns the previous daily low, which will target the previous low. And that is how you can be able to use a candlestick pattern using a pure price action to be able to get what you want. So on also the candlestick theory and the magic bounce back strategy, that is why I'm going to talk to you about some few good details of how you can be able to understand what the candlestick says about the boom and crash magic box strategy, and how you can be able to leverage the boom and crash magic bounce back strategy with some few candlestick chart patterns and get a very nice result. We have some target and stop loss. I'll show you how to be able to get some nice target and stop loss using the magic bounce back strategy, and even using any other prior action that is a fully determined like boom and crash trading system. And also on my bonus tip, I have the best time frame for magic bounce back strategy, which is the best time frame for you to identify when to trade with the magic bounce back strategy and when to understand which time frame to analyze your trade. Like I told you earlier today, even today, I give a very nice recap signals in my VIP signal group, and using this confirm highs and lows system trend, we're able to have some few good trades. But I'm a price action trader, and for boom and crash, I only trade boom. I only buy boom and sell crash. I don't trade against the spike, but I give signals to some people like that. And in my VIP group, I have a nice VIP group. You can check the link in the description. I give some free nice VIP signal group daily. I also have some premium signals that you can be able to get 5 to 10% of your daily equity every 2 to 48 hours using our VIP signals. So we have the free signals and you have the VIP signal that you can test at your convenience. So that is what you need to understand. So let's dive in now. I want you to understand that the purpose of this video is to show you that you just need only one higher time frame candle to succeed in trading. Higher time frame candles could be daily time frame, 4 hours time frame, H1 time frame, M30 time frame, or M15 time frame, or with corresponding lower time frame in options. What I'm trying to let you understand here, with just a single candle, you can be able to have what you want from the market using our AMD system. You need to understand the candlestick anatomy as well. The candlestick anatomy, we have the bullish candle and we have the bearish candle. Bullish candle means buyers are in control, and bearish candle means sellers are in control. This is a close, this is an open, this is the low, this is the high. The same thing with bearish scenario, often close, low, high. So you only need one candle to make a good money you need to make in trading system. And we have a good system that you can be able to use either on higher time frames or lower time frames to only make sure you are using the only one candle scenario to make sure you make a good money out of it. This is the power of today in a bearish and a bullish form. You can see market often here accumulate, break below, create a low. That's the lowest of the day, and push up the price higher for the distribution phase. That is why we are going to get the high. We are going to make sure we trade from the lowest of the day to the highest of the day, because after market reach the highs, it will still retrace. The same thing apply to the bullish scenario of this market. So this is what you need to understand about AMD structure and boom and crash magic bounce back strategy. You can be used to use a very single candle and be able to trigger an entry for you after the break of the highs or the break of the lows, and you are very good to go with your strategy. So that is what you need to understand with that. So let's move to the next phase of it. So we are going to talk about the entry trigger for magic bounce back strategy. What are the main entry confirmations you need to get for you to be able to enter your trade with magic bounce back strategy? What are the major entry triggers you need to have, and make sure you have a good trading setup with the magic bounce back strategy and even any other system like that. So let's talk about the entry triggers. The entry technique bearish. If the highs of the candle range is swept, go to the lower time frame and look for a shift market structure or change of character, and then enter a sell trade at the return of the available feed area like order block or fair value gap that caused the change of character. Target the low of the candle range as TP. So let's assume there was a sweep of this low, liquidity sweep. Whenever I mention sweep, I mean liquidity sweep. And whenever I mention liquidity, I mean liquidity sweep, because whenever price come and take above the previous high and reverse back into the range, that is a manipulation done by the smart money. The smart money must always make sure they hunt your stop losses, they buy at a premium price level and sell at a premium price level. And that is why we have the demand zone and supply zones, and those are the major zones the smart money are pushing their money there. So that is when you need to understand for the entry for the bearish scenario. So if you just enter the trade and go to the lower time frame, if you spot the setup on the H4 time frame, you can go to 30-minute time frame or 15-minute time frame for your entry level using a candlestick confirmation price action, either the bullish engulfing, bearish engulfing, hammer, shooting star, and the major, regular, updated, and the unique candlestick pattern that always works in the market. That is for the bearish scenario. So we are going to talk about the target and stop loss. If you want to target, I still have a last bonus tip. That's why I told you need to listen attentively and don't skip any part of this video, because this is one of the best video that you have ever seen in your life, because it's a special video about a special boom and crack price action strategy, and it's also going to enlighten you about your own trading system on how you can be able to evolve price action and get the highest result from the market. So let's go in now. So for this target and the stops, take profit and stop loss. Let's assume I have, this is my low, this is my high. So this candle we are seeing is the range candle. This sweep of liquidity, this low, you see liquidity has been swept by this week and markets go back into the range. So where I like to enter my trade is between the low of this candle to the close of this reversal candle, which is an area around this area. This is where I want to take my trade, and I will target the highest of this previous candle as my first take profit, which is penalty fee is 100% high or low of the range candle. Place stop loss few pips away from the high or your zone or low of the demand zone. And that's why you are seeing, if you have the robot, we always have 100 pips stop loss and you have 200 pips target for the 1:2 risk to reward if you are using the robot. For those that are using the strategy, and let me even show you one signal I gave into my VIP group this afternoon, and I also share it with one of my VIP member. I sent a signal after a few minutes market started spiking, and we have just jumped into the main what we want, and it's just using this liquidity sweep and reverse back into the range and continue trading higher. And that is exactly what happened, and let me show you now. Market stopped, and I told her I don't like to trend range market, and I was able to bring a nice setup for her. And after I spot the setup with the boom and crash management strategy, and I confirm everything, I sent her that nice scalping setup that you can be able to scalp and target 100 pips, 150, 200 pips stop loss, take profit, sorry. And just some minute I sent her I told her we only like to trade this distribution page. Just some few minutes after I talked to her, and we allowed the market continue, and before you know, market started spiking. And see what happened, exactly what happened. Price break above this high, return, break another high again, and come back to a fair value gap here. If you go down to the lower time frame, you should be able to see exactly what I told you with the candle. There was a liquidity sweep there, but the candle reverses and continue going off. And even right now that I'm recording this video, the market has moved almost 150 stop loss intact. And let me share you from the VIP signal group that I have. So this was the morning spike. When the market spike off, you can see when the market spike in the morning, and market retraces down and get and continue trend, and we didn't bother about it. It was later that the price action started to go off, and before you know, market, I even post seldom that C setup is forming. This is why I forced in the VIP group as around 16:20 I found that the pure price action setup is forming, that market was unable to break the previous day low, and market is reversing a market is reversing to form a higher high breakout of structure, a market is trying to head into the next range of that highly daily candle, and that is how the market continued to move, and that is how it was able to go. See here, markets has moved almost 160 pips intact, catching spike with this entry level from the 19885 price level, and you can see this was how the awesome was moving on the M5 time frame, and we moved down to the 1 minute time frame. This is the confirmed entry trigger that was expected by the boom and crash magic spike strategy. Let's move to the last session of this session, where I'm going to give you the best time frame to use the magic bomb spike strategy. So if you want to be catching this kind of nice set off with the boom and crash magic bomb spike strategy, the best set of entry and time frames, if you are using the monthly time frame, you should use daily as your entry trigger. If you are using the daily, you should use 4 hours time frame as your entry trigger time frame. If you are using the 4 hours time frame, you can use the 1 hour as your entry trigger time frame. If you are using the 1 hour time frame, you can use 15 minutes as your entry trigger time frame. If you are using the 15-minute time frame as your higher time frame, you can use the M1 time frame as your lowest time frame entry trigger to get into the trade. This is Forex Gold trading channel, and make sure I help the struggling trader to make sure they find any possible option that they can leverage their trading system and make sure they are consistently making profitable in the market. So this is a special boom and crash price action trading strategy which is created according to the AMD, which is the accumulation manipulation based system that we have. And that's why you see, if you are catching spike with our robot, anytime it's catching spike in a one direction, the robot will automatically be only taking good trades and ignoring any possible reversal trade. What I'm trying to say here is that your entry level is coming from a higher order blocks and a fair value gaps, and that's why you see the success and the win rate is at least reasonable, even for the strategy and for the boom and crash AI spike detector. And anyone you want, you can be able to DM me. And if you have any problem, please, as a trader, kindly contact me. I'll be able to help you with some nice advice. I have a free Telegram channel where I post to the VIP signal group, and I have the VIP ones for those that want to invest in themselves. And you can be able to DM me whenever you need me, and also be responsible to always listen to you and contact you for anything. So let me use this opportunity to make sure and wrap up this session. I don't want the video to be very long, but because I must make sure I respond to this question to my VIP club member, and that was the reason I have to make sure I do the right thing and do it at most. So if you have any question about this strategy or anything you want, kindly comment in this comment section below, or contact me or DM me, and I will be able to respond to you with your question before the next 24 hours by God willing. And I wish you in the next success of your trading journey in the next coming days. And if you are finding any value on this video, please don't forget to like this video, share this video to your loved ones, so that I can be able to have the VIP sessions and the free VIP signals all together. And nice to have you now. See you in my next video. Bye. In my next video, I'm going to talk about what we call the market structure, so that you can be able to leverage the market structure and get a very, very good entry using the boom and crash magic bomb spike strategy. So let's dive in and have a nice session. See you then.